Hi there, I'm Irk, and this is my channel Get Irk. In this episode, Roblox, the future of video games or just a robust? Before we get started, if you could help me out, hit the like button and subscribe. Thank you so much. In this episode of Investing In, we're going to take a look at Roblox, ticker symbol RBLX. Roblox is more than just a video game company. It's a video game development company too. Not only can users play the games on Roblox, they can develop their own games and sell those on the platform as well. Roblox is a free-to-play platform. What that means is it doesn't cost any money to play. However, there are a lot of microtransactions that generate a significant amount of revenue. If you want to buy cosmetics like character costumes or anything like that, it all costs money, and it's the currency of Roblox called Robux. Roblox's primary audience is children ages 6 to 15. They love the platform, and it's great if you can start when they're kids because they'll still keep playing when they're adults too. However, this kind of audience is a double-edged sword because you have to make sure kids are safe from bullying and harassment. So far, Roblox has been very successful at this. However, as you've probably seen in the news, Facebook has come under serious fire, so there's going to be even more stringent eyes on this sort of thing in the future. Roblox came public on March 10th via a direct listing, whereas with an initial public offering or IPO, the shares in that case are offered to brokers in advance at a reduced price. This generates a lot of interest, and on the first day of an IPO, it usually pops significantly higher than the price that the brokers paid. With a direct listing, there is no investment bank involved, so the shares open on the public market at what the company decides. Historically, direct listings haven't been a great way to go public. Oftentimes, the company's stock will sell off, and in many cases, it will sell off below the direct listing's original price. But before we get to that, let's take a look at the fundamentals of Roblox real quick. Because Roblox is a growth company, you can see that it has an earnings per share of negative $1.23. What that means is that it's spending more money than it's making in order to ensure that it can grow. However, it also means that the company is difficult to value since it isn't making a profit. It's losing money. I had a viewer ask, how can you determine whether or not an asset is overvalued or undervalued? And while quite a bit of that is subjective, it's in the eye of the investor whether or not an asset is overvalued. I find that Yahoo Finance has a pretty good method of doing this. If you go to finance.yahoo.com, you can see that they have a fair value calculator that's easily represented on this color bar. Further red is overvalued, further green is undervalued. The way that Yahoo calculates this is by using a combination of the PE ratio, or price to earnings ratio, and the growth rate of the company. The problem with calculating fair value this way is you have companies like Nvidia that have always been overvalued. In fact, Nvidia was considered overvalued when I bought it in September of 2016, and back then I bought it for $14.67, and as you could see, today it's $208.31. What that means is sometimes you're just going to have to buy a company. It's always going to be overvalued, and if you want in, you're just going to have to buy it when it's expensive because it'll stay expensive. Now let's go to the charts and see where Roblox has come from and how it's performed since its direct listing. On its first day of trading, Roblox opened at $64.50 and dropped all the way down to $60.50 and had a high of $74.83. Roblox ended up closing the day here at $69.50. This means it had an opening day pop of about 7.75%. Let's see where it went from there. You can see that Roblox had quite a lot of movement. You can also see that a few days later, it almost hit its all-time low. This is an example of what I was talking about earlier when direct listings don't really perform as well as IPOs typically. However, Roblox really gained in popularity and hit an all-time high of $103.87. However, after that point, Roblox really started to pull back. And you can see that if you follow along to where we are today, Roblox is now just closed this past Friday at $70.44. In my previous videos, I showed you my play-by-play so you could see how I invested in an asset over time. However, I've heard feedback that it went a little long and some people really weren't interested in that. So what I'm going to do now is I'm going to approach every asset as if I don't own any shares in it. After I show you the buying plan that I would take if I didn't already have a position, I'll show you where my current position is. But I'll try to be speedier so it doesn't get boring. Longtime viewers of my channel will know that I really like to use Fibonacci retracement to determine levels of which I could buy at. And you do this in TradingView by hitting Alt F and then dragging from the low of a move to the top of a move. And in this case, we're going to use Roblox's all-time low down here at $60. $70.50 and its all-time high here of $103.87, and you can see that generates levels. If you're using TradingView, you can go to the gear icon and then add a number of days so that you drag your Fibonacci retracement further on the chart. What this does is it gives you the ability to look at the levels over time so that you can see where you might be able to find support. In this case, you can see that the Fibonacci retracement was fairly accurate because down here at $93.63, we found support here. We found support at the $87.30 level here and here. We got stuck up on the $82.18 level here. The $77.07 level has provided support, although now you can see that we're approaching $69.78. Additionally, from a technical aspect, we've broken a low. If you want to maintain higher highs and higher lows, you can't break a previous low, and we did at $71.96 when we cracked through on Wednesday and then closed below it on Friday. So where would I start my position? If you're like me, you might feel like you don't want to miss out on an asset, so you might want to get in early, especially when you're looking at an asset like this, which is sold off more than 30% from its highs. However, when you're talking about a new stock, especially one that's a growth stock like Roblox that could be extremely volatile, you'll really want to control your risk. And so what I do is I change what I would normally buy in terms of quantity. Typically, when I open a new position, I'll buy half of my allocation when I initially buy, and then I'll save an additional 50% to buy in 10% increments on the way down, buying 10% more of my allocation at each price point. In Roblox's case, I would use a 25% or less initial allocation and then maybe buy 5% allocations on the way down. So you could make your first buy on Monday anywhere between $70 and $72 since we're already so oversold from the high. However, you're going to want to have additional buy levels. A next buy target might be around here where we can see that we found support at $67.60, followed by down here where you can see we've had a close at the low at $64, followed by a low here of $60.69. This would give you 4 buys already. But how do we determine levels below where the stock actually opened in case it breaks through its direct listing price? Well, Fibonacci retracement helps us here too. You can see that we have additional levels now at $48.70 and $33.70. However, the gap between $60.50, the all-time low, and $48.70 is pretty significant. So what I do here to create an additional buying target is to split the difference between the two. Doing this gives us another buying target of $54.60. Then I would do the same thing between these two levels and I'd get $41.20. So now, in addition to our 4 buys, we have a 5th buy at $54.60, a 6th buy at $48.70, a 7th buy at $41.20, and an 8th buy at $33.70. If you were following my strategy of buying a 25% allocation and then 5% at each of these levels, you'd only have a 55% allocation at this point. Is it possible that Roblox could get this low and even lower? Absolutely. I've seen it before. However, Roblox is really popular, and as long as it keeps up its growth and has its audience retention, I'm not anticipating it to even break its all-time low. So what would I do if it went higher from our initial buy and never pulled back? Well, in the case of Roblox, since I'm using conservative quantities, I would actually break a rule that I normally have, which is buying up my cost basis. In other words, I might buy shares that are higher than my cost basis, which would raise my per share cost. But in a case of Roblox, you don't know if it's going to get away from you. The reason I don't do this initially is because I have an adage that I like to follow. You can always buy a stock higher, but you can't necessarily create cash from air if a stock sells lower. In other words, patience is key when it comes to an asset like this. Next up, let's do a really quick recap of where my position is currently. I made my first buy here on September 29th with a 20% allocation at $77. I made my second buy here on October 5th of a 5% allocation at $73.60, and then I made my last buy this past Friday, October 8th, with another 5% allocation at $71.40. From here, my next price targets are the ones that we've discussed in the video at $67.60, $64, and $60.69. Again, using 5% allocations at each buy target. Personally, I think Roblox has really good prospects for the future, and I think it's a great long-term investment, which is why it's in my investments in play portfolio. If you're looking for other video game stock ideas, check out this video here. Thank you for watching, hit like and subscribe, and I'll see you in the next video.